Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast, joined by Carol Massar and Tim Stenovec. We welcome our audiences across Bloomberg Television, Bloomberg Radio, as well as on YouTube. Carol, taking a look at an S&P 500 that yesterday tried to get above that 3,900 level, could not hold it, and now back down in the 3,800 level today.
Yeah, but it's been bouncing around right throughout this session, and we're seeing some conviction behind that S&P 500 trade. I'm looking at, in terms of volume, trading volume, it is up about 12% if you look at the past 20 days of trading. So we are seeing investors really kind of move into that trade.
Yeah, so much for kind of sitting back and waiting to hear what Fed Chair Jay Powell has to say tomorrow. I mean, investors, I think, are obviously concerned about an aggressive Fed and to what extent the summary of economic projections talks about inflation being high years from now.
And then what they have to do to tackle that, Tim, and that means, of course, slowing down growth, that they can only control the demand side of things and not that supply equation. But at least for now on the long end, Caroline, you're not, at least on the day, seeing any of those expectations for slower growth on the horizon, as you'll just continue to climb all the way across the curve.
And this really seems to be the correlation that continues. The bond yields, they push higher. The stock market just cannot manage to level up ahead of that. Although, in broader perspective, we are not down at those June lows. We have seen extraordinary resilience, whether you see it just in an overall ability not to go back to its lows, Romaine, or indeed not see the VIX spike higher as we have done with the MOVE index.
And I thought Sherry Paul over at Morgan Stanley Private Wealth had a good point. She was talking about how everyone's focused on the S&P hitting those June lows or retesting those June lows, but how a lot of sectors are doing that. And I was crunching those numbers, and you are seeing, for example, the telecom index, S&P Telecom, which is basically the Googles, Metas of the world. That's right now is actually at a 52-week low and a year-to-date low based on the close right now and based on those numbers. Here's what we have, at least on the headline markets here. Dow Jones Industrial Average down about 300 points or 1% on the day. The S&P 500 down 44 points or 1%. The NASDAQ Composite down about 110 points or 1%. And the Russell 2000 going to finish the day down by about 25 points or 1.4%.
You know, and to Romaine, I thought higher interest rates are supposed to be good for banks, but you're not seeing that play out in the banking sector. KBW Bank Index down about 1.5%. So maybe that's reflecting, Taylor, some of the concerns about the economic outlook and business conditions.
You know, Carol, you really see the concerns on a sector level as well. When you think about, for the radio audience, the best performers and the worst performers, and there is a lot of red even in the best performers. That really shows this broad-based selling pressure that was underway today. One sector in the green, Carol, just barely 0.9%, almost 1%. It's tech, hardware, and the equipment index. Otherwise, everything really here is red. I'll take you to the bottom of the screen. A lot of this is transportation and real estate, materials, and as well as some of the retailing, as we really focus on sort of the yields higher and the pressure that's putting again on that real estate market.
All right, so don't judge me, but unfortunately, one of my gainers has actually dipped into the red. It was really hard. I know.
This was a good one too, Carol.
Well,
Netflix was finally getting some love.
Man, they're up about 50% since May 11th. We're up as much as 3% in today's session, but finishing the close down about 1/3%. Nonetheless, Oppenheimer upgrading yesterday. We've seen a bunch of analysts, Macquarie, Evercore, come out. It looks like analysts are buying into this ad-supported subscriber tier that Netflix is planning to roll out, and we've seen increasingly some positive momentum from the analyst community, but sorry about that, ending up actually lower on the day. Moderna holding on to its gain, though. It was up as much as 5% by the close, up 1.4%. Top in the S&P 500 and NASDAQ. Came out, talked about its COVID booster demand. It's higher. They talked about shortages among some pharmacies out there. And this is the vaccine. It targets the original coronavirus strain as well as the Omicron variant. So some love, if you will, for Moderna shares today. Wynn, casino, that area was definitely an outperformer today. Wynn top in the S&P 500, up almost 3%, up about 6.6% at its highs earlier in today's session. This had to be with some signs that China might be easing some of the restraints and restrictions in Hong Kong, which would bode well for Macau. We know the world's largest gambling hub. And of course, Wynn and Las Vegas Sands, names like that all have exposure, Tim. to Macau in a big way.
Okay, let's talk decliners here. I mean, the big one sticking out is Ford at the bottom of the S&P 500 today on a percentage basis, finishing the day down by 12.3%. Excuse me. Shares tumbling today the most since 2011. This after the company said inflation continues to push those supplier costs higher. We did learn yesterday after the market closed that supplier costs for the current quarter are coming in $1 billion higher than expected. We talked to Keith Naughton, who covers the company, a little earlier today. He said it's also a point that you just have thousands of, pretty much expensive SUVs and trucks just sitting there. They're stacked up waiting for chips right now, and that's certainly eating into the company as well. Shares of Nike finished the day down by 4.5%. This after Barclays downgraded the company. Barclays says that weakness in China is seen as a particular risk and that the North American market, quote, may no longer be able to subsidize weaker China results. We do hear from Nike on the 29th. And then Gap shares falling by 3.1% today. We did learn that the company is cutting 500 corporate jobs. Costs are going up. Sales are getting weaker. The roles being eliminated, they're mostly at Gap's offices in San Francisco, New York, some in Asia as well. Remember last month, Gap pulled its full-year guidance, citing macroeconomic uncertainty, also looking for a new CEO.
I guess Gap's not a surprise, but the amount of earnings warnings, amount of companies warnings we are getting does feel like a bit of a sea change in the moment. And what is not a sea change, though, is, of course, the narrative coming from central banks and the idea that the US leads the charge in terms of hawkishness, and the Federal Reserve means that the Bloomberg Dollar Index once again pushes higher. We're up 0.4%, a new record high. That means we've got weakening against all of the other currency pairs. Canadian dollar, the loonie, off by 0.8%. Remember, this is one of the central banks that led the charge, that did a full 1 percentage point, 100 basis points previously. So too has Sweden now on the day. The Riksbank, Swedish krona, falls a percentage point against the US dollar, even after the shock and the awe of a percentage point rate hike. This because everyone then goes, oh, well, in the future, they're going to be less hawkish. Go figure. We'll see whether what happens the days after the Federal Reserve moves, of course. But really, the Norwegian krone getting some weakness today because oil is getting some weakness. Let's look across to the commodity spectrum. WTI crude off by 1.5%, Brent crude off by 1.1%. This as we anticipate more hawkish central banks and therefore a slowing world economy. We do interestingly see the likes of steel just falling a little bit. You said, Tim, a little bit earlier about some of those steel makers. And sovereign bonds, actually, yields just rising across the board. Money coming out of UK gilts, of French debt, of Belgium, across Europe, it seems, Taylor.
You see bonds, money coming out of bonds here within full faith and credit as well, pretty much all the way across the curve. I know, Caroline, you're coming back to your desk, but pop quiz. In the last 8 days, how much has the 2-year yield risen? Romaine?
I know.
No, not
I heard you failed this
Caroline.
yesterday.
She tuned in yesterday?
5-0, Caroline.
Wow.
Romaine, no
I'm not
cheating.
shocked by anything that isn't 100 now, though, Taylor, I'm afraid. From
know.
central banks and to
100
yield
is a new
moves.
50. I love
But
it.
it's just unbelievable. We've climbed from about below a 350 all the way up to almost 4%. Caroline, I know that we also talked about this yesterday. Yields continuing to climb, and at least for today, even with a strong 20-year bond auction, 20-year and even 30-year yields, again, just this relentless climb higher.
Well, remember, just months ago, I feel like we felt like we were settling in when it came to yields. And this is the big question. We've been talking about it a lot. Where is the high when it comes to yields along the Treasury curve? Where is the bottom when it comes to the equity sell-off? I mean, Nouriel Roubini coming out with some very extreme, down forecasts when it comes to the equity market.
Doom.
No.
Really?
Why do they call him Dr. Doom?
Well, I mean, if he came out and said we could rally 40%, he wouldn't be Dr. Doom. But I mean, the forecasts I feel like are all over the map. And I think what you showed, Caroline, earlier about the earnings projections and numbers coming down, that says a lot.
Okay, well, let's push forward to tomorrow.
Well, just real quickly, too, in terms of numbers coming down, I mean, Stitch Fix earnings crossing the wire right now, and those numbers actually missed here, basically for the most recent quarter, and the guidance that they're giving is actually a lot lighter than what the street was looking for. Obviously, a much smaller company, but it really adds, I think, to that drip of companies really scaling back their expectations.
Yeah, you bring a really good point, and we talk about, economic conditions tightening. We look no further than the retailers. I mean, I talked about Gap a few minutes ago, but think about recent news that we've got from, Bed Bath & Beyond, for example, and, other companies like Rent the Runway. Even though it's a tiny company, it is a good barometer of, not necessarily Rent the Runway, but the retail sector, a good barometer of what's actually happening, even though they are facing big issues, big challenges.
And this highlights amidst all the volatility, the fact that Mike Wilson over at Morgan Stanley continues to say, Caroline, this is why the equity risk premium is way too low. It's like 120 basis points too low. You're just not getting compensated enough for this risk within the equity market. How much of that, when we think about the equation, is just 10-year yields and the discount rate rising. And so the equity that risk needs to go up as well. And frankly, it hasn't. That earnings yield is still way too low relative to where it needs to be. That's why the price needs to fall in order to make the math work.
Because if the earnings aren't going to rise, and it's interesting, so much for this strong consumer. When you keep, is it the companies that execute to a strong consumer? Because Stitch Fix, why aren't people buying online as much as they weren't? Is it because we all just use that within the pandemic? Is this, as we heard from Sherry Poole of Morgan Stanley, the bubbles of inflation just move around and we're leaving some of these pandemic darlings behind, although Gap was never anyone's darling.
It's a really good point, right? We moved and shifted from buying stuff to doing stuff. So if we start to see people pulling back on experiential
rent the
things.
runway then. Everyone's doing
Did you guys buy your new Peloton rowing machine yet?
No, I'm just sticking to my bike.
Okay.
I don't want to muddy my water.
$3,200.
Oh, that's it.
cheap.
Yeah.
Wow, there you go.
Running outside
Right.
is free.
And they don't actually put it together now, right? We have to put it
They
together
do put
ourselves.
this one together.
Okay.
They don't put the bikes together anymore, but this
Okay,
one they will.
gotcha.
The shipping is included, Romaine.
Thank
And then
you.
there's the
That's
monthly
great. Is there like, do I have to pay extra for the cord,
40
the charger?
No,
No, it's not like Apple.
Well, they're never going to make any money then.
all right, are you done?
No.
Okay, I know.
But
All
I
right,
think
anyway,
I think we have a commercial break.
okay, I think we got to run too.
Are we,
All right.
are we advertising Peloton rowing machines? No.
Peloton
You can hang
commercial
it on
after
a
this.
wall, which is
Love you
really
too,
cool.
Carol. Have a good day.
All right, have a great day. That's going to do it. That's a wrap on TV, radio, and YouTube. Beyond the Bell. We will see you same time, same place tomorrow.